And what exactly is the big picture? How about something that says we're now experiencing a 9-day losing streak for the Dow Jones Industrial Average, the longest since February of 1978, when, if you can imagine, we had double-digit inflation and a severe lack of leadership. The federal funds rate was at 6.75% at the time, but it would finish the year at 10%. Wow. So we were at the start of a horrendous decline in the abyss of the late 1970s with super high interest rates. Now we're still nearing the beginning of a rate cutting cycle. Don't listen to others who say, well, it's not a cutting cycle. It is. And it may or may not go slowly. It doesn't matter. It's very different from the similar losing streak in 1978, a time when most of you were not alive and I was living in my Fort Fairmont. What else is part of the big picture now? How about the fact that we're heavily oversold? When we've experienced this level of oversold negativity, minus 5.2% on this S&P short-range oscillator, I swear by, only twice in 2024. One time in April, where the S&P bottomed at 4,967, then advanced to 5,668. Another time in November, when the S&P had sunk to 5,701, then rallied to 6,090. These were two of the best buying opportunities we had the entire year. But you had to be willing to go against the prevailing attitude of negativity with tons of articles and news stories about how something terrible was about to happen. Now, I know there are plenty of major events coming up. I didn't say major negative events, just events. We have a big Fed meeting tomorrow where we pretty much know what will happen. There could be dissents. There could be members of the Open Market Committee who are more hawkish than others. But we'll still have a Fed chief who's data dependent and doesn't want to get too far ahead of himself, even if the commentators all wish he would. We know that there are inflationary tariffs in the wind, but we don't know their size, their breadth, or their impact. But that's why we're already oversold. People saw this coming. They're worried, and they took action ahead. They dumped stocks so they wouldn't be long or own as much when the meeting occurred. Now, we got some leadership stocks that are being torn apart, the heaviest of which, of course, is NVIDIA, up 163% for the year, but down 22 points from its recent highs. Points, not percent. Gee willikers. What exactly is the matter with NVIDIA, down 8 out of the last 9 days? I think nothing. It remains the leader in the most important space of the entire market. It's riding a wave accurately depicted by a seasoned warrior, Matt Murphy, the CEO of Marvell Technology, who said something amazing on this show about the size of the AI opportunity just last night. Listen.
We are in an unprecedented AI supercycle for AI as a service, but also for the silicon TAM underneath it. This is unbelievable. I've been doing this for 30 years. I've been through every major one of these cycles: PCs, smartphones, digital cameras, cloud computing, you name it. This one's bigger than all of them.
NVIDIA is not being dethroned by any competitor. Even the companies that are trying to compete against it are faithful customers who have no choice but to try to develop something because NVIDIA can't supply. They can't supply enough chips to meet the demand from most customers.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.